Ladies and gentlemen, thank you for joining me today. We are going to explore some fundamental economic concepts and their recent real-world applications, particularly focusing on the aftermath of the COVID. We are Unity of Consciousness, where we help you to achieve personal and spiritual growth. Why are we interested in this topic? We are on a humble mission to help you achieve growth. Growth will entail in many directions. Knowledge gives you power to prosper in life. Healthy life will give you free time to pursue further growth, which will lead to personal and spiritual growth. Today, we will discuss the free market, the principles of supply and demand within this market structure, the role of interest rates, and how these elements have been impacted by the pandemic and stiff competition. We'll also examine how Australia and America have responded to the economic challenges post-COVID by adjusting interest rates. We also will discuss how the markets should work and how are they working at this stage, and what makes interest go higher and prices higher. 1. Free market. At its core, a free market is an economic system where prices for goods and services are determined by the open market and consumers. In a free market, the forces of supply and demand dictate prices without government intervention. Producers are free to produce whatever they wish, and consumers can buy whatever they desire, leading to a self-regulating system driven by competition, innovation, and efficiency. The beauty of a free market lies in its ability to allocate resources efficiently. Producers respond to consumer preferences, leading to a dynamic and responsive economy. Entrepreneurs are incentivized to innovate, improve quality, and reduce costs to attract more customers. This system promotes economic growth and prosperity, benefiting society as a whole. 2. Supply and demand in a free market. Supply and demand are the cornerstones of a free market. The law of supply states that producers are willing to sell more of a good or service at higher prices. Conversely, the law of demand states that consumers are willing to purchase more of a good or service at lower prices. The interaction of these two forces determines the equilibrium price and quantity in the market. For example, if there is a high demand for smartphones and limited supply, prices will rise. Producers will then be incentivized to increase production to meet the demand, eventually stabilizing prices. Conversely, if there is an oversupply of a product, prices will fall, prompting producers to reduce output. This constant balancing act ensures that resources are allocated where they are most needed. 3. Interest rates in a free market. Interest rates play a critical role in a free market economy. They represent the cost of borrowing money and the return on savings. Central banks, such as the Federal Reserve in the United States and the Reserve Bank of Australia, influence interest rates to control economic activity. When interest rates are low, borrowing becomes cheaper, encouraging businesses and consumers to take loans for investment and consumption. This can stimulate economic growth. Conversely, high interest rates make borrowing more expensive, reducing spending and investment, which can slow down the economy. 4. Increase of interest rates to cool economy. Sometimes, an economy can grow too quickly, leading to inflation, where the prices of goods and services rise rapidly. To prevent the economy from overheating, central banks may increase interest rates. Higher interest rates make borrowing more expensive and saving more attractive, reducing spending and investment. This helps to cool down the economy and control inflation. For instance, in the late 1970s and early 1980s, the United States faced high inflation. The Federal Reserve, under Chairman Paul Volcker, raised interest significantly to combat this inflation. Although this led to a recession in the short term, it ultimately stabilized prices and set the stage for sustained economic growth. 5. Markets, demand and supply. Affected by COVID-19. The COVID-19 pandemic caused unprecedented disruptions to global economies. Lockdowns, travel restrictions, and health concerns led to massive shifts in supply and demand across various sectors. Supply chains were disrupted, leading to shortages of goods such as medical supplies, electronics, and even everyday items like toilet paper. Demand patterns also changed dramatically. There was a surge in demand for remote work technologies, home entertainment, and online shopping, while demand for travel, hospitality, and in-person services plummeted. These shifts created imbalances in the market, with some sectors struggling to meet the sudden increase in demand while others faced severe downturns. Governments and central banks responded with stimulus measures to support economies. These included direct financial assistance to individuals and businesses, as well as monetary policies like lowering interest rates and purchasing government bonds to inject liquidity into the markets. 6. Australia and America. Increase of interest rates. After COVID. As economies began to recover from the initial shock of the pandemic, inflationary pressures started to build. Supply chain disruptions, coupled with increased demand from economic reopenings, led to rising prices. To address these inflationary concerns, central banks in countries like Australia and the United States have started to increase interest rates. In the United States, the Federal Reserve began raising interest rates in response to higher inflation rates driven by factors such as supply chain bottlenecks and increased consumer spending. The goal is to temper economic activity enough to bring inflation back to a manageable level without causing a severe economic slowdown. Similarly, the Reserve Bank of Australia, RBA, has also taken steps to increase interest rates. Australia's economy, like many others, experienced supply chain issues and rising prices for goods and services. The RBA's interest rate hikes aim to ensure that inflation does not spiral out of control while maintaining economic stability. These rate increases are delicate maneuvers. Central banks must carefully balance the need to control inflation with the risk of triggering a recession. The goal is to achieve a soft landing, where inflation is reduced without significantly hampering economic growth. 7. Interest rates, inflation, and prices affecting costs. While we have extended our discussion regarding how free markets work in terms of prices and interest rates, now we will turn our attention to current situation. Why are the prices so high now, and why are the interest rates going to be likely higher or will stay in this stage for a while? Free market exists when there is a large number of buyers and sellers, and the free market regulates the prices. It is a point of agreement between buyers and sellers. Is there anything wrong with this market? Is it a free market still? Let's define buyers. Buyers is the party that has purchasing needs and purchasing power for products and services. It generates demand in a market, and this will be met satisfactory with the supply of these products and services. There are a few types of buyers with different purchasing power. There are large companies and small individual buyers. Our interest today will be focused towards the small individual buyers with smaller purchasing powers. What is happening now is that the purchase need of the small buyer has not changed. The purchasing power has changed since there is more costs and the wages are stagnant. Interest rates increase in Australia since May 2022 have increased 12 times, with 40.50% increases and 25% increases. It has been said to cool the economy down. How much cool is the economy down with your purchase power? According to Statistista.com, the housing costs for Australian homeowners were around 15.5% of household income in financial year 2020, meaning you are going to spend almost 16% of your budget to pay back the house. For an average income of $100,000, you are going to spend $15.50 in mortgage, simplifying things. This will also depend on the price of the house and the possible affordability of paying back that mortgage. According to loans.com.au, the average loan change in Australia from March 2023 to March 2024 has increased by $31.097 for a mortgage of average $576, $866 in March 2023 to $607, $963 in March 2024. Also, loan.com.au states that an average loan commitments in Australia in March 2024 have increased by 9.9%. Let's look at the prices since 2020. According to Australian Bureau of Statistics, over the 12 months to the June 2024 quarter, the CPI rose 3.8%, and according to Australian Parliament since March 2009 to March 2019, the overall inflation rate, measured by the CPI, has increased 23.4%, not counting the aftermath of COVID. As per CanStarBlue.com, surveys the average grossly bill for Australian households as of August 2023 is as below. A household size of 2 people spends $155 per week, forking out $8.060 PA, $8.366, and a household of 5 or more spends $204, forking out $10.608 pascals, $11.011. Also, I believe this is very conservative and could be much higher. What this means for you: if you are a household of 5 or more, which you will need a house average 3, 4 bedrooms might get a mortgage average $600,000. Now your payments will be between $3,500, $3,900 average, according to money.com.au and sophie.com.au, with annually between $42,000 and $46,800 for a 30 years mortgage, depending on the interest rate scored and payment distance. Also, you will need to pay average $15,000 annually in grocery only. Do not forget that there are more life expenses that we have not countered. Some of them are cars, either cash payments or interest payments, utilities, medicine, electronics, household items, clothing, school items, etc., which all have had a good hike in prices. Just mortgage and groceries will cost a family of 5 or more an average of $59,400. Average of mortgage PMT and added groceries of $15,000. How much more? If you have X1 kid at school, you pay only school fees from $6,000 to $25,000, depending on the age of the kid in school they are attending, not counting all other needs of the kid or kids if you have 2 kids. Now, let us look at the wage price index. According to the Bureau of Statistics, the wage increase is 0.8% this quarter and 4.1% over the year, both ending March 2024. So, if you are 2 parents earning an average earning $170,000, $200,000 in the household, your wage increase was average $6,970,800. How then are you going to afford all these expenses when your home loan has increased $31,000 since last year, not including all other expense increases? It is being said that with this interest rate increases, the house prices will decrease. However, this conclusion is too young, and we will be waiting how things will take shape. So, as a human, when are you going to assess and get into the conclusion that there is something wrong with this situation? As we explained at the beginning, the Reserve Bank of Australia is trying to cool the economy due to the price index increase or price increase of goods and services. Your purchase needs of goods and services has remained the same, if not increased. However, the purchase power you hold now is affected due to the necessity of paying more mortgage, groceries, and more expenses per year with a very small salary increase. According to lensmonish.edu, Australians are changing habits of spending, either holding off some items indefinitely or are searching for sale items. Also, as per Lens Monish survey, Australians are pessimistic to spend more. That is again a conservative approach. You have less money in your pocket, or your money has lost value due to the price increase, interest increase. What you could afford with $100,000 in 2020 will be not possible in 2024. Large co-price fixing engaging. Price increase was affected by COVID, but why prices continue to go up. Now, we will get some more insight. The price should be regulated by a free market. CPI has been up substantially in the recent 4 years. The free market is defined as per Oxford Languages by Google Dictionary as an economic system in which prices are determined by unrestricted competition between privately owned businesses. Unrestricted competition is the key that many participants take part in both sides. Many sellers and many buyers. There are many buyers, that is for sure. Are there many sellers that do not stiff the competition? If you go to a big supermarket nowadays, you will see a large number of brands in the shelves with ready products to respond to your needs, likes, and wants. Only all these brands of food, drinks, hygiene, etc. could be owned only by 5, 10 companies. All these brands are they subsidiaries. Let's see some of them. PepsiCo has these subsidiaries: Pepsi, Lay's, Quaker, Gatorade, 7UP, Doritos, Cheetos, SodaStream, Ruffles, as well as regional and local brands like Gamesa, Mayfair, Tortrix, and Caro Coco, 7UP, Aquafina, Mirinda, Mountain Dew, Chipsy, Egypt, Simba, South Africa, and Kurkur, India and Pakistan, Aquafina, and perhaps more. Let us see Coca-Cola. Except 13 Coca-Cola brands, there are these subsidiaries of Coca-Cola: ADS soy-based beverages, AHA sparkling waters, Aquarius, Ayataka, Green Tea, Chivita, Seal Water, Costa Coffee, Dasani Waters, Del Valle Juices and Nectars, Fairlife, Fanta, Fresca and Fresca. Mixed cocktails: Fuse Tea, Georgia Coffee, Gold Peak Teas and Coffees, Honest Kids, Ilohas, Innocent Smoothies and Juices, Jack Daniels and Coca-Cola, Minute Maid Juices, Peace Tea, Powerade Sports Drinks, Simply Juices and Simply Spiked Adult Beverages, Schweppes, Smart Water, Sprite, Topo Chico Waters, and Hard Seltzers, Vitamin Water. Now, let us look at one more co, which is GlaxoSmithKline or GSK, which produces dental pasta, medication vaccines, etc. GSK has many subsidiaries and group companies that we are not able to mention all of them here. Full subsidiaries, as per GSK website, are 75 operating globally, and there are more and more partially owned subsidiaries. See the link below. If there are companies that are so big with so many subsidiaries, they are known to and will engage in price fixing. The parent companies will make sure you have many options only to own all of those options in your life-to-life spending. Therefore, all these participants as sellers, sons and daughters of one parent, in the market that is supposed to be free, have so much power that one with a normal logic cannot call an unrestricted competition. This leads to conclusion that the prices have kept to increase not only to COVID aftermath, but to uncompetitive markets and far from being free with unrestricted competition. So not be fooled at all. Also, you might ask why the governments are allowing these megaliths to exist at all? If any of you has studied economics, do you remember the economies of scale we were taught? Economies of scale for the megaliths have happened due to the easy and corruptible politicians that do not represent the voters anymore. What to do next? This speech is us giving you information regarding life issues to arm you with knowledge how to navigate life, to have a better life, and to have growth personally and spiritually. Having knowledge gives you power and choice in your life. We will continue with our pledge to inform you regarding many things in order to enhance your knowledge in health and welfare to lead you to prosperity. Check our next video on Fridays regarding health and saving money. This particular video was in response of the private company of Reserve Bank of Australia that promised not to increase interest rates after COVID, but did anyway 12 times, and is still considering to leave them in suspense, or it is leading the Australian environment into a concept of accepting more interest hikes. It is really testing the Australian behavior. At the end, it is up to you to change the life you want. Do you accept more to be pushed, or do you say enough is enough? Pick your choice. In conclusion, the free market, governed by the forces of supply and demand, is a powerful mechanism for allocating resources efficiently. Interest rates play a crucial role in regulating economic activity, and adjusting them is a key tool for managing economic growth and inflation. The COVID-19 pandemic brought unprecedented challenges, disrupting supply chains and altering demand patterns. In response, Central banks in countries like Australia and the United States have increased interest rates to address inflationary pressures and stabilize their economies. As we navigate these complex economic landscapes, understanding these fundamental concepts helps us appreciate the delicate balance required to maintain economic stability and growth. Understanding further the price hike, there is a growing suspect of big companies imposing market competition constraints, with many absorbed subsidiaries that lead consumers to have a false belief in choice of products and services. So, this delicate balance in economies is losing delicacy by the minute. If you found this topic and tips helpful, consider researching more to understand how the economics and politics climate is shaping your life. You can find more support in our channel for more content, techniques, and resources on personal development, your well-being journey, and spiritual development. Visit and subscribe to our channel and watch videos that you find beneficial and seek for valuable lessons. Consider people who may benefit from this support. Thank you, and we appreciate your valuable time.